Hi there, this is Steve Miley, the market chartist on behalf of forexfraud.com, and we're now taking a look at both the Australian and New Zealand dollars versus the US dollar again in here, looking at the broader range theme, but really with a much more bullish risk in here for both the Australian and New Zealand dollars going into the first part of February. So the push higher we had in here through early 2017 in January for Aussie dollar, US dollar, up through 75.25 has neutralised this sell-off we saw, this Trumpflation trade in here, November to December sell-off of last year, driven by the Trump victory, driven by the rate hike from the FOMC. That's been neutralised by that January rally up through 75.25. It's now signalled a broader range environment, 77.78 to 71.55, but the further extension higher we've seen in here to begin February does leave growing threat for a push through 77.78, and that could potentially signal a far more bullish theme then going into the balance of February and Q1. Similar story for the New Zealand dollar in here, the rally from late December through January up through 72.39, neutralising this multi-month head and shoulders topping pattern that we saw from the second half of last year, and neutralising the November-December sell-off that we saw for the New Zealand dollar. However, that's shifted us to a bigger intermediate term range theme, 74.03, 68.67, but again a solid consolidation to begin February, probing higher into the end of January, and we certainly see risk for early February to challenge 74.03, through which would then signal an intermediate term more bullish shift. This has been Steve Miley, the market chartist on behalf of forexfraud.com, and I wish you a great trading week.